What happens when a legendary British engineering firm, a quiet data empire, and a streaming giant step onto the stock market stage? Over the past 2 years, Rolls-Royce, RELX, and Netflix have each written very different chapters of growth, stories full of comebacks, resilience, reinvention, and big, bold moves. So in this video, we're going to explore what's really been happening behind those share price climbs, how they compare to their values exactly 2 years ago, and what analysts are now saying about the road ahead. No investment advice, just the facts, the trends, and the big picture. Let's dive right in. Let's start with a name almost everyone knows, Rolls-Royce. But we're not talking about the luxury car maker here. This is Rolls-Royce Holdings, the aerospace and defense engineering powerhouse. Back in May 2023, the company was still recovering from the massive turbulence caused by the pandemic. Its share price was hovering at around £1.47. Investor confidence was shaky, travel hadn't fully rebounded, and the business was still seen as vulnerable. But fast forward to May 2025, and that same share is now trading at approximately £8.14. That's not just a rebound. That's a phenomenal 450% plus rise in just 24 months. So what happened? Well, according to general analyst commentary, a few things clicked. Rolls-Royce finally reaped the rewards of a deep, painful internal restructuring, streamlining operations, cutting costs, and focusing on higher margin areas. The aviation sector came back stronger than many had expected, with long-haul air travel pushing demand for its engines. And then there's the boost from defense and nuclear, both areas where Rolls-Royce has been expanding aggressively and profitably. Of course, analysts do caution that this momentum isn't risk-free. Global instability, supply chain disruptions, and shifting defense budgets could all throw a spanner in the works. But for now, Rolls-Royce has gone from struggling for altitude to cruising at high speed, and investors have noticed. Now, let's turn to RELX PLC, a company that doesn't always grab the spotlight but quietly underpins some of the most critical decision-making industries in the world. Formerly known as RR.L PLC until it rebranded to RELX PLC in July 2015. This change was part of a broader simplification of its corporate structure and branding. RELX operates across legal, scientific, technical, and healthcare information services. If that sounds dry, it's actually pure gold in the data economy. In May 2023, RELX shares were priced around £24 a share. As of now, they're trading near £40.99 a share, a solid gain of around 70%. Unlike Rolls-Royce, RELX didn't need a comeback story. It's been a consistent climber, quarter after quarter. Analysts say the key to its success is predictability. RELX operates a subscription-based model. It sells data, insights, and tools that clients rely on every day to make critical decisions, from publishing scientific journals to helping lawyers and insurers assess risk. And here's something else they're pointing to. The company has been quietly integrating AI tools into its products, not in a flashy way, but in a way that helps clients make faster, smarter decisions. That's driving both retention and pricing power. It's not a flashy stock. You won't hear about RELX on social media hype forums, but for analysts and institutional investors, it represents resilient, tech-enabled revenue. And now, on to a company that's all about entertainment, Netflix. 2 years ago, Netflix was at an interesting crossroads. Its share price in May 2023 was about $365.36 a share. Growth had slowed. Competition from Disney+, Amazon Prime, HBO Max, and others had intensified, and there were questions about whether the company had peaked. Well, Netflix answered those questions with bold, decisive moves. As of May 2025, its share price has surged to around $1,180.73 per share. That's a 220% plus increase, hard to ignore. So what did it do right? According to analysts, Netflix's ad-supported subscription tier brought in a brand new audience. It wasn't just a revenue win, it was a data win. more targeted ads, better margins, and increased global reach. Then came the crackdown on password sharing, a move many thought would backfire. Instead, it boosted sign-ups and created more paying households. And perhaps most impressively, Netflix doubled down on non-English content, successfully creating hits in markets like South Korea, India, and Latin America, which gave it a global moat competitors still can't quite match. Of course, streaming remains a high-cost battlefield, and content budgets are massive. But so far, analysts believe Netflix has defended its crown better than expected. So, let's look at the scoreboard again. Rolls-Royce, from around £1.47 to £8.14 a share. A massive turnaround in aerospace and defence. RELX, from around £24 to £40.99 a share. Steady, data-driven growth with strong recurring revenue. Netflix, from around $365.36 to $1,108.73 a share. Reinvention in a competitive streaming world. Each company has its own rhythm, its own strategy, and clearly, its own results. So what's the current outlook? Across the board, analysts tend to describe Rolls-Royce as momentum-rich, but possibly pricey after such a dramatic run. The next leg depends heavily on maintaining profitability in a volatile sector. RELX is seen as dependable, defensive, and well-positioned for the AI revolution, especially in industries where data accuracy and reliability are critical. Netflix gets mixed but generally positive commentary, recognized for innovation and dominance, but with lingering questions about how long it can sustain content spending and subscriber growth without compression. No guarantees, no predictions, just measured, fact-based perspectives. So, three very different paths, but all with one thing in common: growth through transformation. Whether it's a return to glory, a steady climb, or a digital reinvention, these companies have all made waves. Now the question is, which of these stories do you find most compelling? Let us know in the comments. And if you enjoyed this deeper dive into some of the stock market's standout performers, give us a like, hit that subscribe button, and join us as we continue exploring the big trends shaping the markets. Thanks for watching, and see you in the next one. Please note, this video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research or consult with a licensed financial advisor before making any investment decisions.